Dude, look at this Bitcoin, bro. Look at this fucking dude. She's going. What are the alts
But
doing?
okay, but like, didn't two of the biggest bears go bullish? Like they capitulated the past 2 days. I forget who they even were. Dude, I even
I
saw
think
like
Rosie. I
David
think Rosie went.
Rosenberg. He's
Yeah,
capitulating
yeah,
too. Like,
yeah.
this is the time that everything just flips.
Dude, I know it's crazy, but I just it's one of these things where I think we have the possibility of a growth scare, honestly. Another one. Maybe it's not so severe as the summer, but um, we just printed 3.2 on Fed on the GDP now, right? So like, what are the comps going to look like in Q1 of 25, and like, how do people take that when we start getting to pricing that in? It's going to be interesting. I think there's a possibility for a slowdown. It doesn't necessarily, mean we're slowing down, but like, dude, system's going to guide us, so we ride the wave.
Yeah. Wait, so why do you think we're gonna get just a crazy bull market? What's is it just your balls that are telling you? What is it?
Well, I gotta say the Bulls definitely have a signal here. There's definitely like something a tingling, if you know what I mean. But
Yeah.
like ultimately, look, I think that the market is in a position where we are basically in a cycle of historic euphoria. What I mean by that is like the market's moving in a way on the premonition that Trump is going to be the Trump from 2016, right? Like literally as he wins, market rips up, pulls back, immediately bids back up. Very familiar with this price action. This
Yeah.
is a Trump era price action, right? And it's what some people like to mistaken on the surface is like, oh, everyone thinks Trump's bullish. That means he's going to be bearish, right? Oh, just because everyone thinks something means the other thing's going to happen.
Well, everything has
And
been opposite the last couple of years. It's been weird.
yeah, yeah, but like also just understand that Trump isn't necessarily running on the same policies as he was in 2016, right? Like it's Trump again, but like for example, I could see this being an issue if Trump was coming back in and he was basically he was unchanged from a policy perspective in terms of there's no new tax cuts, there's nothing, right? Like he's the same Trump from 2016. I could see people running a bit on that and then getting surprised when people try to think that there's going to be like an overly reformed environment when he didn't really bring anything new to the table. Because again, the Biden administration did actually leave a lot of tariffs on the table, right? There are some things that they didn't remove from Trump's era, right? So it's that's the most interesting part here. I think that Trump is bringing something different to the table. What he does bring, I think, is yet to be determined. But because of that, right, you have a wave of deregulation. You have an entire new sector that's being opened up with haste, which is cryptocurrency. Which again, we can debate the significance of that in terms of the overall economy. I think it's more so the guy's very open, right? He's very open for reform, and he's even more open than it almost seems he was the first term. So I think that's really where the market's going. The market's expecting big change. Now, does that not happen? And do we get surprised? And does that create a kind of reversal at some point? It's possible. But right now, I think it's like you have to strike when the iron's hot, right? I think just there's an immense amount of pressure here. Now, that could be the system can flip on us and disprove that. But man, listen, it's just what I'm seeing and feeling at the moment, and that could change. Feelings are one thing. That's why we have a system. We're going to rely on that for the data.
Yeah. Well, man, I hope you're right because I'm pretty sick of risk off, honestly. Like
Yeah, dude.
that bond
I
trade was fun for the first few months, and then it got real annoying.
Dude, how crazy was that? We literally bottom ticked this. Like
Yeah.
I'm not even joking. July 2nd entry. We
Yeah.
watched this
That
go
was a
up.
good trade, but man, did that
Dude.
blow up in our face by the end.
Well, I mean, we didn't lose any money.
Yeah,
We
but
made money, but I mean, dude, I'll tell you, we
shit
left a lot of
happens.
money.
Yeah.
Yeah. We left way too much money on the table, but we basically fixed that. We patched the errors there going forward.
Yeah, we released a
Yeah.
patch.
We
But
released
like
the patch.
honestly, TLT's looking good. Like
She's looking juicy,
we
brother.
got the
She's looking
higher
juicy.
low. It based for a long time too. Like just from a technical perspective, it's looking good. And even just from a macro perspective, it was very overextended at the lows there.
Down here, yeah, for
Yeah, like
sure. I
so
mean,
many
look,
cuts were priced out. The Fed was anticipating what was like the peak unemployment, like 4.2 for the next like 2 years.
we can actually look that up. I think so. You know what?
That
No,
was
it was
like on their dot
oh
plot.
four 4.5 was essential tendency for the next 3 years,
Yeah.
and like we were getting close. I mean, July's print was. I mean, we're talking 20 bips shy of the central tendency for the next 2 years.
Yeah. So
So
it was definitely overextended, taking that into consideration. And so it's looking good. It's looking real good. And maybe we do get risk off, but I really hope not. I'm
no, I hope not
liking
either.
the Nasdaq. The Nasdaq's a lot more fun to hold.
My favorite regime is risk on. Like I don't know, I don't care what I look. Risk off is like I think the coolest thing about risk off and slowdowns, right? Let's just say anything negative growth related is making money with something that outperforms the market itself, because that's where everyone's like, oh, it's cool alpha. Like they think like Big Short, like alternative, like you can make money when the market goes down. They get hyped up. Everyone loves that, right? I don't care too much for that. I like being long risk on assets because that's where the linear exponential returns are, right? Like that's where like the big money's made. Like NASDAQ going up 20% in like 6 to 8 months with leverage, is way more powerful than getting a quick bond trade, right? Like you want to ride those easy long trends. You don't want to be in something like, again, look at bonds, right? Bonds were up a lot. And then they kind of did a mountain here. They shot up and shot down just as quick. Now, typically bonds in a real risk off environment that's sustained will run, but bonds are known for doing a lot of sideways action, rapid price move, and then sideways action or even pulling back. Like they're not known for really long um bull runs. I mean, even if we go back to like 2018, right? Like we go back in time, like you'll see here, right? You get this initial rip late 2018, and then for almost a quarter, you do nothing. A pop, nothing, and then a ramp, nothing, and then the COVID ramp. Or no, actually, no, this wasn't the COVID ramp. This was going into COVID, the ramp. Nothing, and then here's the COVID ramp. Like you could see that there's just plateaus of just nothingness and just sideways, right? Like equities tend to trend a lot better, making them more exciting and just more linear. And I think that's what makes markets fun, right? Risk off is just there to protect capital, add some alpha in the inopportunistic times where the risk assets aren't moving. But man, I love risk on. I love it.
Yeah, risk on is where it's at. And
Nothing like long.
it's not like we don't make alpha during risk on because the whole market's going up. Like we trade with leverage, so we make alpha no matter what. But
Yeah.
the alpha is definitely amplified during risk off when equities are dropping and the only thing going up is bonds, which is what we'd be long. So we do make more alpha there, but yeah, it's really highly dependent on timing, and we're never going to get the timing perfect. That's impossible. So that comes with stress, which I don't like stress. I like just holding the Nasdaq with leverage and just riding the wave up, going to the beach every
Oh,
day. That's the life.
absolutely. I mean, like I think that's the big differentiator here between like the day trading models and like what we do. I mean, we're probably on pace to be making for the year 2 portfolio updates a month, right? So it's like we don't like when I say portfolio updates, I'm talking portfolio shifts. Like we are very low touch. Our model's very low touch, so we're not really out here trying to time the tops, time the bottoms, get our praying for price targets. None of that nonsense. We literally just lock in, ride the wave, ride the trend, and bail when the signal appears. And so far, this year we were doing pretty good. We had a bit of a slip up in the summer, but we're back on track, it seems, and hopefully we can finish up the year strong and rock into 2025 with the new system we just improved over the last like 3 to 4 months that should better handle those shady, shallow, risk-off environments, which we now call slowdowns. I think that's the biggest key, honestly, at Market Radar. if you're a member and you're listening to us and listening to this, I think that's the most influential update since the RQF itself, since us dropping the RQF itself. So if you are a member, you already know what I'm talking about. But since we dropped our combo model where we're long,
Utilities?
our combo model where we're long Nasdaq and risk on risk off assets and Bitcoin, right? So we're long Ares, which is our stock bond now utility and healthcare model, right? Our basically our equity bond model, and our Bitcoin model. We dropped the RQF combining those two models, right? Before the RQF, it was just individual models. We put them together, and I think that this new system update over the last couple of months, where we can define the slowdowns and differentiate them between a risk off environment, a true risk off environment, is the most significant game changer to our tools and our models. And you even see that in the CAGR. Like Ares now has a total return of 50 million% since 1990. Like that's retarded.
Ridiculous. It's absurd.
Like
I wonder
every
what
one,
like people that stumble upon our podcast and they see that, they're like, "Oh, that's bullshit." Just right
they
away.
gotta think it's nonsense. Like, dude, if I told you since 1990 I turned every $1 to 500 grand, you would be like, dude, that's retarded. There's no way.
Yeah.
I mean, let's be fair. It is a back test. All right. We're not saying we turned $1 to 520,000. We're not saying, oh, we did this, It's a back test. Does it guarantee future results? No. But it's also not a high frequency model, meaning there's not a lot of factors in there like slippage, bad fills on a day where you're like, for example, like you could have a model that you test that there's a small error and it's a drastic change in results. For example, maybe you don't have the open close data and you're running a back test and you end up like assuming that the trades are happening on the open or the close, but they're not happening at either. They're getting filled at the low of day, which would be impossible to predict. Like there's things like that could happen. Our model is very simple. We trade a few times a month, even if that, and it's always into the close. That's it. There's no like having to guess. And so far, I mean, look, we're doing well this year. I hope we can blow everyone away again next year with stellar performance, but it's really like one of those things where they say keep it simple, stupid, and like I honestly believe that's the best approach in the market. Just keep it simple, stupid. Like that's why Bitcoin maxis do as well as they do. Like I know it sounds dumb, but that's why they, in some way, are superior investors. And I'm not saying you need to be like being a Bitcoin maxi is good, but like think about it, right? They had the testicular fortitude to sit down in front of their keyboards and YOLO the shit out of this orange coin and just buy into oblivion. No, it doesn't matter if it goes down, they just keep buying, right? Think about it. There's no like, oh, but the breakout, but the moving average, but this, no, they just buy.
Yeah, that's literally what our models are like. Because there are times where they trigger a buy, like we buy the Nasdaq like on FOMC day after we rip 4%, and we're buying the Pico top, and we got people in the Discord like, "What are you guys doing? This is ridiculous." But it works out. Just keep it simple. You literally got to be like a Neanderthal and just like, okay, buy now.
Dude, it's so true. Now, that doesn't mean don't do your research, obviously. What it means is like, I think if you were to study just basic investors, right? Just call them, take a pool of investors, and you were to convert every one of them into a sociopath, I would almost guarantee you the return profile would be exponentially higher. Where they just don't care, unfazed. They just act on a signal. I would guarantee you most people end up even matching or outperforming the market. It's the emotional aspect, I think, that's the most dangerous, in my opinion, to every investor. Because, especially when you're dealing with leverage, it's even more amplified. Like, for example, if you put on the Qs and they drop 4%, the Qs drop 4%, you're down 12% in a drawdown. Let's say you got $1 million, right? You're down 120 grand. Right? Some people will be like, it's just a number on a screen. No big deal. But there's definitely going to be somebody that's thinking about it in terms of like, oh, that's a year's worth of salary, or that's 2 years worth of salary in a couple of days. It might be over for me. This might not be the good idea. And they panic, right? And that I think is where they lose faith quickly and they keep flip-flopping. I think that's honestly where the differentiating factor comes between people that can really run systematic models and those that can't. Like you have to be stone cold. You have to be a stone cold killer in these order books. You just put your orders in and you just wait. And sometimes you take a loss and sometimes you ride a bigger trend. And the idea is obviously ride longer and higher trends than you do take losses. But you might have to take a couple losses in a row, maybe over a couple of months. Maybe you go into a 10, 15, 20% drawdown for a couple of months, and then you reverse. Like, for some context, the RQF was just in a drawdown, and we're coming out of it. We're in a 2.5-month drawdown.
Yeah,
I
think that's actually one of the hardest parts is coming out of a drawdown and going into the next trade like that drawdown never happened. I think a lot of people get stuck in that situation where they come out of a 20% drawdown, let's say, and then, oh, you know what? That kind of hurt. I'm going to go half size on the next trade. And they go into the next trade, which is a winner, but you make half the money because you went half size because you were too scared because of the previous drawdown. That's like a common thing. Every trade is different, and taking the baggage from the last trade is just going to mess things up.
Yeah, here's a great example. RQF, right? Now this model was updated. And this is exactly what you like. This is to your point of like being more systematic, right? Not so emotional. But the model's been updated, and for some context, we are not this close to the high. This is the new updated model with Aries, which has that slowdown function. Members, you guys know what we're talking about. If you don't know what we're talking about, go subscribe on our website. You'll get access to this deck, and you'll see exactly what I'm talking about. But ultimately, we've recovered pretty much most of the drawdown. So for 2 months here, it was hell, and we're back. And I can go back in time. A month and a half here, hell. This much longer. This is probably like 4 or 5 months here, and we come back in a stride, right? So for us, the way we approach it, if we're building a model and look at 2021, right, just chopping around, this was probably the most annoying period in the markets from at least at Market Radar over the last 5 years.
Yeah. And I really appreciate the members that stuck around through all of that, because that was brutal. And I'm glad that some of you guys stuck around and you're here to reap the rewards that come after it.
Yeah, it was a crazy time. I mean, we weren't drawing down much in terms of most of the 2022 decline, but we definitely we're just sitting there on our hands, and we were extremely patient. We were just waiting, and time finally came, pivoted out, and we're rocking and rolling now. But the idea here, I think, is to really emphasize is if you're going to take a systematic approach, it does. And this is not me telling you to follow these models. You should never just blindly follow anything. Please do not just YOLO something. Do your research, understand your risk. But if you're going to take a systematic approach in markets, you have to understand that when you're up, you don't sell just because you're up a lot, because that's not a good barometer to sell. And just because you're in a drawdown and you draw down quite a bit doesn't mean it's over. Like, you really have to take things from a systematic point of view, just as a computer, right? Your computer, if you're running a systematic program, it's just printing out triggers. It has no emotion. If it's got a $10 million account and it's down 25%, it's down 2.5 mil. Do you think the computer cares that it's down 2.5 mil? No, it doesn't matter, right? And if it's up 17 million on 10 million over 2 years, do you think the computer is euphoric? No, it doesn't care. And I think that's where human bias comes in and really drags away from the beauties of what could be systematic in most people's portfolios. Thank you guys again for listening. If you have any questions, feel free to reach out to us on X at the Market Radar. And if you're looking for our product, you want to learn more about our systematic approach, go to market-radar.com, sign up today, become a member. You'll get daily updates on our Quantex signals and positioning. Thank you again, guys. We'll see you next week.